I don't want to go fight over properties at auctions anymore. I don't want to go out and look at 100 properties to find 10 that might be good. I don't
Yeah.
want to drive around. I don't want to deal with contractors. I just don't want to do that stuff anymore. And in this space, you don't have to. That's the whole thing. Everything I do today is right in this office. Right? I have access to the internet. I've got access to public records. That means I have access to deals, and I just sit here and look at notes, every single day. I don't have to drive anywhere, do anything.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Kevin Shortle, is an award-winning speaker, instructor, consultant, and author who specializes in real estate-backed mortgages. Kevin, welcome to the show.
Thank you, Dylan. Pleasure to be here with you.
It's great to have you on here. I always like to start off at the top of the show by asking guests how they got started in real estate.
Real estate was always a passion project of mine. I remember as a very young kid, in fact, I think in my high school yearbook, I had people like good luck in real estate. It was just the direction I wanted to go. And I had read some early books on how people bought real estate and made $1 million and, that sort of thing. And so very focused on the more traditional real estate. So that's something I started to want to pursue right away. In fact, after college, I became a commercial real estate appraiser and then got into real estate sales, real estate investing, and eventually what I practice today and have for over 30 years now is investing in real estate notes.
Yeah. The very interesting, because notes are huge right now, but you've been doing it a while. Walk me through those early years getting into the note space, because I can't imagine it's as big as it was today with kind of the notoriety and the way that people talk about notes as being an alternative way to invest in real estate.
Oh, it was a much, much, much smaller niche. Plus, we didn't have the technology that we have today. It was much more difficult business to do at the time. But I found my way within it. So in the early days, what we were looking at was this: we had a market condition where the Carter administration had interest rates, double digits. People today look at 6% mortgages, 7% mortgages, go, oh my God. Well, they were 18% interest, getting a bank loan back during the late
Oh my
70s, early
God.
80s. So it was really, really high. So a lot of home sellers just said, hey, look, you don't need to go to a bank and pay 18% for 30 years. We'll finance it for you at 9%. Okay, half of the bank rates. And a lot of seller finance notes, if you go back historically, that's what they were written at, 9%. And that's the reason. So you had a lot of people that were doing seller financing, not because they wanted to, but because they had to sell the house. So the niche that we found back then was, well, let's find those folks and see if they would rather have a lump sum, albeit at a discount. Let's see if they'd rather have a lump sum versus the monthly payments. And a good percentage wanted that. So the task became, well, how do you find those folks? Well, you
Yeah.
couldn't get on the internet. You couldn't go to a trading platform. They didn't exist. You couldn't get on your cell phone. They didn't exist. I mean, we had microfilm, we had paper. We had to go physically to the courthouses to look up in the docs to see what looked like somebody who seller financed the note, and then we would do a direct mail campaign out to those folks and basically offer them lump sum versus a cash flow. So it was much more challenging. Today you've got online trading platforms, you've
Yeah.
got active buyers and sellers of notes. All the information is on the internet for public records. We didn't have any of that stuff, but the benefit to that, by the way, is I had to learn it the right way. And I
Yeah.
think that's why I have a huge advantage over some people, where I had to know how to do the due diligence. I had to know how to really dig through these things and look at the files. We had no choice back then. Today, the investors who are in this business and out of it quickly.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Are the ones who think it's easy and think that, well, I've just got this information and run it through an AI and I'm good. Doesn't quite work that way yet. Not saying it won't get there. I definitely use AI, by the way, in what I do, but there are some limits to it.
Yeah, it would be nice if we could just say, "Hey, AI, I'd like to buy some properties, make some offers for me, and I'll just sit here and prompt you." But we're not there yet. I want
Yeah.
to ask you a couple granular questions, Kevin, about that time frame. So was this like county courthouse? You go into the records, you're dealing with people who may or may not be super helpful, and you're scouring this and trying to find, hey, what are the notes, or where are the opportunities here for us to make offers? Walk me through exactly what that looked like.
It was tough. So it was local county courthouses you would go to, and you'd go in there with a notepad and pen, and you're either going through books where all the deeds and mortgages are recorded. So we would specifically look not really at the deeds, but at the mortgages. And if we saw one that was John Smith is buying the property and Susan Jones is carrying the financing, right? That's who the mortgage is being paid for. We need to find Susan Jones. And a lot of times on those security instruments, their address would be on there. So I'd write that down on my notepad, and that's a lead. And sometimes we're sitting in a microfiche machine. Now, a microfiche machine was all these documents were scanned on a piece of plastic, basically like a tape.
Yeah.
And you'd sit at a machine with a magnifier and scroll through those. So we would look at doing the same thing though. Does this look like, okay, John Smith is making payments to the estate of, again, Mrs. Jones. Okay, the estate of Mrs. Jones, probably seller finance. Let's reach out to them, or a small LLC. So we would just do the follow-up like that. Because again, there wasn't, these documents weren't online. And
Right.
so if they're not online, they can't be on the internet. You couldn't find them. Today, you can buy lead lists. If you're going to do the direct mail route, you can buy a lead list with the name, address of the person who owns a note, the amount of the note. I mean, there's all kinds of things you can do today. The very beginning of that happened probably my second year in the business. There was a company, they're still around today, that figured out a way, because now a lot more things were getting online. So they would data mine these things, and then they would sell you a list of people. And that was a game changer, because if we had a bunch of leads, I figured, well, the way I can scale this business the way it is today is I can go out and train people how this business works. I can provide them leads. I could even provide them with marketing materials, let them market to these leads. So we could buy couple thousand leads, get them out to the people that have purchased my training, which was probably $300 back then. And they would send out the leads. When they found somebody who was interested in selling, they would send that information to us. We would get it purchased. Okay, now back in those days, we didn't have all the money to buy these notes. I was starting with $0 as far as
Yeah.
what I could
Yeah.
invest in notes. But what I did was I was armed with information of who those buyers were. One of those buyers, for example, FNAC, we call them, First National, they're still around today. They've been doing this for 50 years, 50. And they were one of the big buyers at the time that we would send notes to.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And they would make an offer on the note. So if the note balance was 100,000 and they offered 80,000 for the note, we'd go back to our seller and offer 70. If they accepted 70,000, we made 10 grand. If they accepted 75, we made 5 grand. And that's
Wow.
how it works. So initially in the
You
business,
were you were
we
wholesaling these notes.
you got it.
That is
You
amazing.
got it.
Oh my
That's how it
god.
started. So, and then my uh, ability to create a course. My first course I wrote was in a 3-ring spiral notebook with 6 cassette tapes and a bunch of written text. And that's the first initial program that I sold, because then it wasn't just us going through the list and us going to the courthouse. It was, next thing you know, several hundred people across the country. And that's when we came probably a top 10 company in our second year, top 5 after that, always, because we were putting that together. So all we had to do, we knew we had the buyers in hand. We had several people like the company I mentioned that had millions of dollars and they would actively buy these things. All we had to do was find the seller.
How in the world did you come up with that wholesaling notes strategy before any of this was popular? Was there a course or a group that you were tapped into? Where'd you come up with that?
I didn't come up with it. I was struggling trying to do more traditional real estate. I was struggling trying to even sell real estate, as a agent. And I was more into the financial planning side of things, but I had met someone that had just made $15,000 by doing what I just explained to you.
Yeah.
And 15 grand is a good amount of money today. It was huge back then. I mean,
You're
we're
rich.
talking
Yeah.
34,
Yeah.
35 years ago.
Yeah.
So I was like, well, how did that work? And he told me, and we hit it off. And I said, well, maybe we can do some business together. You're trying to do this on your own. I can at least double it if I'm doing the same thing. And then, of course, when I came up with the idea of teaching this to the masses, if you will, that's when it really started to take off.
At After like a year of doing this or a couple deals, are you then looking at investment properties for yourself? What was your mindset like once you start to see this thing take off?
Yeah, the next phase would be, of course, is you have enough money now to buy your own notes. Again, I know it's hard for real estate investors to say notes, but instead of properties, you said buy a property. Again, we're not buying the property; we're buying
I
the
know.
debt, on,
Yeah.
yeah, on the property. And so you have enough capital to start to buy your own. So it became that, but it also became where I realized that I had a passion and a talent for teaching other people as well. So I was kind of on a dual road of, I knew the information and the way I learned this, I knew that was valuable. I knew that was a good service that I could provide to investors who wanted to learn this. So I was down that track, but I also had the ability to purchase notes.
The note space is so interesting because now, of course, you've got so many people talking about notes. There's so many strategies involving notes. I've even heard about people talking about, purchasing notes to help people avoid foreclosure potentially. And some people saying you shouldn't do that because if they're not paying the bank, why are they going to pay you? But there's just so many different strategies. It's clear to me that, you fell in love with the note space. Was it one thing in particular about notes that you loved, or was it this idea of, hey, I can basically, own the debt without owning the property underneath it?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Well, it comes through life experience. I'm just not a note guy. I bought probably 150 rehab properties. Did well with that. The market changed. I had some rental properties. Did that. I did some lending. So there are other things in real estate that I did and with different degrees of success. But when markets change, you have to learn to adapt. And
Yeah,
every
yeah.
market cycle that went through, and in some of my live presentations, I actually took, all the photographs from presidents from Reagan up to Trump, just saying, look, I don't care who's in office. I don't care what party's in control. I've been through all of these presidents and all the different cycles, and I'm still here, everybody. You know why? Because this business is adaptable. So I think it was overall the attraction to things. And almost counterintuitively, it's what I don't want to do. I don't want to go fight over properties at auctions anymore. I don't want to go out and look at 100 properties and find 10 that might be good. I don't
Yeah.
want to drive around. I don't want to deal with contractors. I just don't want to do that stuff anymore. And in this space, you don't have to. That's the whole thing. Everything I do today is right in this office. Right? I have access to the internet. I've got access to public records. That means I have access to deals, and I just sit here and look at notes every single day. I don't have to drive anywhere, do anything. And when you can buy something, I mean, think about it this way. I'm not taking a lot of risk either. I'm getting ready to do an annual report. So I've kind of looked at my numbers, and overall in the portfolio that I did just in this past year, I was in an average of 86% investment to balance. That means if a note's worth 100 grand, I'm paying 85 for it. So not only am I making a good return, but I have a bonus yield in there in case the loan pays off early as well. That's number one. My average yield was 11.5%. Okay, so I'm making 11.5% on an annual basis, and my investment to value ratio was less than 60%, less than 60. So everything I did was backed by something worth considerably more value. So that note that I may have purchased for $65,000 is backed by $100,000 house.
Yeah, yeah.
And it was an $80,000 or $75,000 loan. So when you combine all of those attributes, I don't think there's another investment that really can stand up to that same thing. Can you make more money in the stock market? Sure. Can you also lose everything in the stock market? Sure. Can you be a day trader? Sure. Can you lose? You get the idea. Can you do traditional real estate and just flip properties? I did a lot, like I said, did 150 rehabs. I made good money on all of them, but can you also lose money? When the market changes, it's
Absolutely.
100% you can. Landlords. I have a lot of people who now I train that are landlords. And, look, you can make a lot of money being a landlord, and it's a fine way to build up real estate income and wealth. But does it come with problems? Does it come with headaches? Are there people who are on the opposite side of that? 100%. People got into the
No doubt.
Airbnbs. Yeah, there's people who do very well on Airbnbs. There's also people who lost everything in Airbnbs. So
Yep. I
with
know 'em.
this, controlling more of your safety, your returns, and building in a discount and building long-term positive cash flow is something very unique. So I think it's all of those attributes that really attracts me to it.
I want to ask you a granular question, somewhat selfishly. So I'm a realtor in Texas, and I've come across now quite a number of people who are interested in multifamily deals, but seller financing them. So they want to
Mhm.
acquire these deals through seller finance. Now,
Sure.
I've also seen that there's some distress in the multifamily space on the operator side. The properties themselves might look great, but maybe these operators bought too deep a couple years ago, or maybe they have difficulty with other properties and it's causing difficulty with this one. If I'm finding these properties on market, do you think that we've got, a snowball's chance in hell of getting an offer across, or should I only be looking off market if I'm looking at seller financing offers?
I would say it's a combination of both, and it's really what I do every day in looking at deals. In a way, I'm doing an appraisal on a note when you think about it. I'm coming up with what's this note really worth and why. There's different grades of notes. Like you said, there's non-performing notes. There's different degrees of non-performing notes, some in the early stages, some in the late stages, some are close to a sale. There's performing notes, there's semi-performing notes, there's slow rolling notes. I mean, there's all kinds of different things, and you've got to have the knowledge and the ability to go through those and determine what that note is really worth. And I do that same thing because I also work with real estate investors who want to buy with seller financing and sell with seller financing. And I tell them, for example, if you plan on doing seller financing and then selling that note, create it where it has a marketable value.
Mm,
Create it through the eyes of a note investor, because we look at those notes very differently than somebody who's just creating a note for the sake of selling a property. So that's really the key, is finding out if I'm going to create a note that's sellable, because whether I choose to sell it later on or not, or when, is a different story, but still make it a sellable asset down the road. What's the right way to do that? What kind of down payment should I do? What interest rate should I set it at? What should the term be? I taught a guy the other day. I said, moving forward on what you're doing, here's where you're hurting yourself. And I'll use round numbers again, but let's
sure.
say it's $100,000. This happened to be land, $100,000 on the land. You're getting 10% down. You're creating a $90,000 note. I'll tell you right now, the most I pay for that note is 70 grand. Well, why 70 grand? Because you don't even have to tell me the interest rate you wrote the note at. I'm looking at my risk first. And my risk is I'm not going to be in that $100,000 property for any more than 70 grand. That's covering my risk. So your $90,000 note, even if you wrote it at 12%, is not attractive to me, because I don't want to pay 90 grand making 12%, and then the person defaults, and then guess what? Now I'm not making
Can't
anything.
sell it.
Now I got to
Yeah,
foreclose. I'm paying money for that. I've got attorneys and everything else. I'm upside down. You can't do that. So, if you get 20 grand down and you have an $80,000 note, guess what? 70 grand is the most I'm paying for it. So I said, look, armed with that knowledge, why don't you do this? You got that same $100,000 lot. You're getting 10% down because that's what the market will bear, let's say. Okay. Or that's how you can sell them quicker. Okay, great. 10%. Create a $20,000 second, create a $70,000 first. Okay. Now we're right there. So now we have a $70,000 first mortgage. We have a $20,000 second mortgage, and then the 10 grand. There's $100,000, right? Sell me the $70,000 note, because now it's no longer a risk. It's about what my return is, what my discount is. And then you keep the second. So you're
mm.
getting lump sum for the first note. You're getting monthly cash flow on the second note right away. And you got your $10,000 down. He's like, got it.
Everyone's happy.
Yeah.
Now, when we talk about some of these strategies, like two notes on the home, and talking through this with sellers who are not investors, right? Uh, and I'm specifically referring to, smaller uh, multifamily properties, maybe like a quadplex, maybe a single family home, or it might be, an investment property, but let's call it, an 8 unit, apartment complex or set of townhomes, but they're not
Sure.
familiar with some of this verbiage. What's your general guidance for how to broach that conversation with a listing agent on the opposite side, or with the seller directly?
If you're the buyer,
If you're the buyer, yeah, or if you're representing the buyer.
yeah, you got to show them. Now, normally you can get a higher price. Don't pay more than market, you know what I mean? But normally it sells quicker if you offer seller financing. There's also a tax benefit to that seller, where you're not, if you sell the whole thing right now, you're going to, have taxes. They're going to reclaim all the depreciation on that whole lump sum. If you carry back the paper, you're just paying taxes on the money as you get it, that sort of thing. I don't know if you want to go that deep, but what it comes down to, of course, is like a lot of things. If you're looking for bargain real estate, the key ingredient is always motivated seller. you know,
Motivated
so
seller.
that's what you're
Yeah.
looking for. If they're motivated, they're going to be more flexible to say, hey, look, here's what we can do. I'll pay you this, you carry back the paper, here's how much you'll get, per month. And oh, by the way, if you decide to sell that paper, I know somebody who would buy it for you, so you can get a lump sum that you need. See, there's creative ways that we can buy a note too. I told you the 2-note solution. What I did on this guy, the same person I was telling you about without using his name, on the land note, I said, look, this note's already created, though. You already have a note where the person's made 6 payments. We can't go back and change that. So on this one, here's what I'll do. Instead of buying all 72 payments, let's see, they had made, so 72 minus the 6 puts us at what on the math? 60 or 52? No, 56.
6,
So
yeah.
56 payments. I say, look, here's what I'll do. I'll just buy the next 40 payments. Okay. I had to, back it into saying that way I'm paying less money. I'm in this deal for less than 70% of what the property's worth. I get all the next payments for the however many months that comes out to, and then you get the remaining payments on the back end. And that's what we did on that one. So it's called a partial buy, and we can do that too. So sometimes with these people, if they're selling an 8-plex, commercial paper like that, I would love to see. You don't see enough of that. I would love that actually. And if it's created the right way,
Bureaucracy. It's
we could
amazing.
even get into a conversation like, hey, you create this note, and after 1 payment, after 2 payments, after 3 payments, this guy will buy it, and here's how much he'll pay for it,
Now,
or a part of it. Yeah.
when we're talking about some of these buyers and sellers, but also I'm looking at this through the lens of a realtor. You're having to explain this, to multiple parties. Even I've encountered buyers who are interested in doing it, but they're not necessarily even certain how this process works. They're not even necessarily aware of the risk. So I want to ask you a question about the risk specifically. So, worst case scenario, if you're seller financing or making an offer to purchase something through seller financing, is the person who is paying you doesn't pay. At that point, what are the range of options that can happen? I'm imagining you can sell the note, or you can repossess or possess the property. Is that generally what happens?
Well, a lot of people will use what's called a contract for deed with seller financing. Now, there's a larger conversation about what states have license sorry, what states have statutes on that, what states don't. But let's just leave that out of the equation for right now. There's something called a contract for deed. So if I were seller financing a deal for you, now whether you're trying to convince me to do it or vice versa, I sell you the property under a contract for deed. What that means is I stay on the title until I'm paid in full. Okay. So you're making monthly payments to me to get the title. So we're under the contract for the deed. But in the meantime, I have the deed in my name. So legally, I have ownership of that property. I am the owner of record. What I'm giving you is an equitable entitlement. Okay, so you're paying the debt, and as the property appreciates or whatever, if you sell it later on, great, you get the equity. You just have to pay off the balance of the loan. Now, why might I do it that way? Well, for some reason, people always know this. Possession is what? 9/10 of the law, right?
Yep.
So if I'm already on the title to the property, I'm already on the deed, and you default in that case, I evict you. In some states, that might take 30, 60, 90 days. I don't have to go through foreclosure because I already got the title. I already got the deed.
Yours.
And our arrangement is if you breach the contract because you didn't pay the loan, you didn't pay the taxes, you didn't pay the insurance, you didn't upkeep the property, I can evict you for all of those reasons.
Got it. Okay. I got it. Got
So
it.
that puts more safety on the lender side versus if I'm here in Florida and I did seller financing on a note and a mortgage, if you default, well, then I have to file foreclosure and I'm looking down an 18-month road. It just
That's the
takes that
risk
long
of
to
when it's not.
foreclose in Florida.
Yeah.
If I was in Georgia, it might take me 90 days to foreclose.
So
We have
part
a
of the
security
strategy
deed up there. So every state's a little different.
part of the strategy too is buying in the states where you can do contract for deed.
Yeah, and sometimes contract for deeds are necessary. Like I said, in Georgia, they use a security deed. They're the only state in the country that does that. And foreclosures are very quick. They're non-judicial. It takes about 90 days and less than $1,000.
Okay, so then
So a contract for deed is a little unnecessary in a state like that. But other states like Michigan have a contract for deed law where it's much better to do that versus a foreclosure. So those are more common up there because the law recognizes those type of arrangements. You can do them in all states. The issue becomes if you do initiate that action and it goes contested, a judge might overrule it and say, yeah, we're going to make you foreclose anyway. Now,
hmm,
why might a judge do that?
yeah,
Well, why are judges basically letting people be tenants that aren't paying for years on end? You hear those stories, right?
uh,
Why are they giving people? There are people right now that were still under the COVID laws that haven't made a mortgage payment in 5 years, and
ugh,
all they do is request to have the bank refinance it. And the banks are under penalties by Fannie Mae and Freddie Mac and under government pressure to not foreclose. So, under COVID laws, which just changed October 1st this year, by the way, but everybody before that, if you asked for a loan mod, you had to be given one. So, what did people
wow,
do? They just
wow,
did that, and I've looked at tapes. I've looked at a list of assets. I'll say we call it tape. I looked at a list of assets. People have made a payment in 5 years. Their loan got stretched out to 60 years. There's people talking about 40-year mortgage. How are we going to do those? I think Trump brought that up in something recently this year, and people are like, "Why would people? It's going to cost." There are people right now in the U.S. with 50, 60-year notes already because they went to the bank and the bank stretched it out.
yeah,
On the loan, so it's already out there now.
happening.
Eventually, what we're likely to see, and if you watch the numbers, you might see foreclosures starting to go up because October 1st, they said that is it. You don't get these automatic mods anymore. You have to have hardship, and we're going to modify maybe one more time. And if you don't make the payments on that,
You're
you're
out.
done. And then they sell the note. The bank doesn't really own the note. Fannie Mae, Freddie Mac, and Ginnie Mae does, but they sell the paper.
Any projects that you're working on, or how can our audience maybe reach out to you or your team?
Yeah, sure. The website is just my name, Kevin Shortle. It's spelled Shortle, so it does look like Shortle, but it's Kevin, Shortle.com. Also, if you just want more information, I've got a #1 bestseller on Amazon, Real Estate Without Renters. So you can pick that up on Amazon. But if you want to find out more about what I do, because I work with people on a consulting level, one-on-one. They have unlimited Zoom appointments in addition to all my education. So I really walk people step by step through the whole process, looking at deals, due diligence, closing, the whole thing. But I also have an elite level where I actually find deals for people. I help fund the deals. In other words, I put my own money in the deal with them as a partnership, and that's going extremely well also. So different levels that people can work with me on that. But for more information, just shoot me an email, Kevin@kevinshortel.com.
Kevin, thanks for coming on the show today.
Absolutely. Appreciate it.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.